Fantastic to have Mauro from Cathedral Finance here with me, and we really are going to delve into a lot of detail about, dare I say, the banks at the moment and lending, and in particular the first-time buyers out there. Mauro, it may sound a bit of an obvious question, but why on earth are the banks so reluctant to lend, I think, to everyone and anyone out there at the moment, or is that a bit of an unfair statement?
I believe it is a bit of an unfair statement, actually, to the banks. The banks in the past have been accused of lending irresponsibly to those with little or no deposit and less than stellar credit profiles.
Yeah.
And that's got the banks into trouble. It's also got borrowers into trouble. Since new mortgage rules have come out around 2014, banks have been asked to lend responsibly by the regulator. These new rules impose banks to lend no more than 4.4 times gross income.
Okay, that's useful to know. I mean, but why they just put, it seems, and it comes across to, I say, general member of the public like myself, that there are just so many hoops to jump through and obstacles. How? And I know we'll come on to first-time buyers, but if you are just looking for a mortgage, what do you need to do and set up possibly in advance, trying to sort of get around those issues?
Absolutely, that's a very good question for first-time buyers. It's very daunting, and I'm sure that you and I have the greatest of respect and sympathy for first-time buyers trying to save this mammoth deposit that they need to buy their first home. And lenders do want to lend to first-time buyers. They just want to make sure that the first-time buyers are going to be a good egg to lend to. In that respect, first-time buyers can position themselves in terms of making sure that their credit profile is a good one, that has strength. By doing that, I'm finding that when I do speak to first-time buyers, that they're fresh out of university or fresh out of college, and so they may feel that they have the perfect credit score, but in reality, they haven't proved that they can borrow money sensibly.
So is that about sort of getting your first couple of credit cards but not necessarily using them, sort of thing? Or
Absolutely. So what I tend to recommend first-time buyers is to take out a credit card and just to put their shopping or put their petrol on there, and just to pay it off each month.
Yeah.
That shows lenders that you are able to manage credit responsibly.
And when it comes to first-time buyers, I know you briefly touched on it, is it all about the deposit? I mean, back in the day, it used to be, if you've got a 25% deposit, then you know what, you're going to get the very best rates out there. But again, house prices, especially in and around our areas, we know it's expensive. Do you need to save up that level of deposits? How can one get around it, especially if you're a first-time buyer?
There are a number of options available to first-time buyers, and in terms of, you don't need to have the substantial deposits that lenders would like to see. Of course, lenders will reward you if you have a substantial deposit, and substantial deposit, you're talking about, say, 25% of the purchase price. But lenders will look at those with a minimum of 5%.
Okay.
There aren't many lenders out there that will lend at 95%. But now, in terms of open credit, where banks are willing to lend, you'll find that probably there are about a dozen lenders who will lend at these high 95%.
Is there a stinging in the tail? Because obviously, if they're doing 95% loan to value, say to a first-time buyer, is that first-time buyer paying a huge amount more on their interest payments?
Yes, a lender will reward borrowers with more deposit, with a better rate. The rates do tend to change every 5%, so the minimum deposit that you need to put down is 5%. Rates around the 95% borrowing tend to be around 4% mark. If borrowers were to put down a further 10%, then you'll see an instant lowering of rates. So the more you've got to put down, the better the rate you're going to get.
Okay, and I mean, everyone sort of talks about, say, sort of the bank of mum and dad, and trying to sort of get funding that way, whether it's for your deposit. I mean, the stamp duty rule changes have slightly gone in people's favours. There is a bit more of a discount when it comes to stamp duty, but if your parents are fortunate enough and they can lend you something, then obviously that's an option. Again, first-time buyers, how can you get around that? Yes, if you've got that from Bank of Mum and Dad, but if you don't have that option, are there any other paths that
Yes.
you can go down?
There are a few other options for first-time buyers to consider. There is what is called a Help to Buy scheme, where you go into partnership with the government. With respect to Help to Buy schemes, these are designed to help those struggling to save a deposit for their first home or move up the property ladder. The Help to Buy schemes are restricted to new built homes only. The buyer is required to raise 5% of the property value as a deposit. The government will stump up a further 20% through a local agency, and with the combined borrowing 5% from your own savings and 20% from the government savings, this will allow you access to much cheaper
Yeah,
rates.
more preferential rate.
In terms of other schemes available to first-time buyers, if they've not got the 5%, housing associations will allow you to part buy and part rent your home, so you're able to buy a share of your chosen property, typically between 25% and 75%, on which you'll have to take a shared ownership mortgage. What are the benefits of a shared ownership scheme? Shared ownership scheme allows you to gain a foothold on the property ladder in an affordable way.
Mauro, so great insight there. You're actually, most people don't know this, but you're actually a very qualified chap, because you're able to offer all sorts of bits and pieces, not just about first-time buyers and mortgages. Just briefly touch on what you can offer.
I'm a qualified independent financial advisor. I work for myself. I'm a sole practitioner. I'm qualified to give advice in investments and pensions and protection. I'm able to offer tailored financial solutions in a simple way.
All sounds great. And if anyone wanted to talk through, in particular, first-time buyer mortgages, pensions or investments, what's the best way to reach you?
Best way to reach me is either via my website, which is cathedralfp.co.uk, on my mobile 07999 196 984, and I'd be happy to help. Happy to give a free initial consultation, and until I'm able to understand how I can help you as an individual, there is no charge.
Fantastic. Well, Mauro, thank you very much indeed for giving us great insight into the world of lending. Really appreciate it.